All right, welcome everyone to our latest market talk with Matt and Cantonese Cat. This has been a long-awaited collaboration that I know many of you have been waiting for. So here we are, and today we're going to talk about the latest geopolitical developments, the overall market structure, cross-market correlations, and everything in between. So how you guys have been, and how have you been holding up in this volatility?
Matt, how you been?
I've been great, I mean, the more volatile it is, the more angry people get out there. But it's just part of the new norm. I think we're just experiencing trying to break resistance levels on multiple markets. So if we can't break resistance, we just go back and get some liquidity lower before higher. That's
Yeah, I mean, I think we've all been kind of busy on various fronts. Market volatility is one thing, and I think it's just life just kind of catches you up, sometimes, and trying to figure things out. But hey, I think right now, honestly, I don't think the overall market is um, that bad, but their sentiment is just extremely horrible. I think I see why people are worried, but I think it's understandable on the surface. But we probably need to dig through a little bit more into the actual data themselves and figure out what's actually going on, where liquidity flows and everything else, rather than just kind of listening to narrative that people get scared about and just keep talking about it. But let's look at the data.
100%. And what's more interesting is that while there are some geopolitical tensions right now in the Middle East with Iran and the US and Israel, we have the Dubai market crashing. So both their stock market and the real estate market, we can see here that over the last couple of weeks it has went down about 35%, which is a great amount. So now we have the Dubai market crashing, the South Korean market crashing. We have the S&P 500 also taking a hit, as we can see right here. We have the S&P 500 going down by about 6%. So 5.5%, 6% or so over the last couple of weeks. However, the risk assets seem to be bouncing faster than traditional equities right now, as we're seeing in Bitcoin. So Bitcoin, it seems like it's consolidating above an important POI, which we'll cover in just a couple of minutes, above the two-day bull market support band, which has been a strong reversal point. It has just reclaimed it for the first time in about 2 months since January, when it had this fake out above it, and then it led to this massive crash in early February. This is a good sign for Bitcoin right here. But the interesting correlation, in my view, is that while liquidity is flowing out of the Dubai real estate market, out of the Dubai stock market, as we're seeing here, out of the South Korean stock market, it's going into other assets that are more liquid, because investors from there want assets that are liquid, that can be transacted much easily. So that, in my view, is why Bitcoin and other so-called risk assets are bouncing faster, because they're much liquid. But I think it's showing a trend that the markets will recover, a trend that says that things are going to get better, in my view, and that the worst is past us. That's what I think this bounce signals. So what do you guys think about that? And what's your view currently? What's your stance on the markets?
Matt, you want to take it away and just kind of share with us what you're thinking?
Sure. I mean, my overall view is that I still think it's a risk-on environment. I still see the IWMs trying to maintain very important levels. I see that a lot of risk-on stocks, specifically related to crypto, are outperforming the general market, and I think that's because we saw a lot of weakness in those previously, the beginning of the year. So now we're kind of getting that rotation into this higher beta names, and people are kind of rotating out of like the mega cap stocks and the SPY and the QQQ. they might still be just consolidating or even going down in the short term while everything else is already bottoming. So I think it's a normal rotation. If basically things were full of fear, I think everything would be crashing together and not rotating from sector to sector. So we're seeing a natural rotation. We're seeing the SPY had a huge outperformance since the crash of last year, since April. And so just give it time to cool off before it makes its next leg higher. But yeah, overall, I think the market's healthy. I think risk on assets are still going to outperform. And I think we're just going to continue the journey higher altogether eventually. But I think the outperformance in risk on compared to the SPY and QQQ is going to continue for some time because those assets probably need to cool off a little bit.
Kat, what do you think?
Yeah, I mean, I think we can talk a little bit more about the international market, certainly. I can pull up my screen here, Matt, if you want to shift over for just a second here. Yeah, so what we got here, this is the Japanese market. This is the Nikkei. I hear a little bit of echo, by the way, but that's okay. It doesn't bother me if it doesn't bother you. But it's just to kind of show you sometimes when things are just being accumulated for like decades. And you're talking about decades here, and you're just looking at charts. You don't know anything about what the underlying economy is like for Japan. You don't know anything about whatever, right? Let's just look at the chart here for ever since like 1990s. You're seeing a basic, a little bit of an Adam and Eve double bottom here. You're seeing a breakout and back test. You're seeing basically a take off over here for the last, 5-6 years in the Japanese market. Yeah, I mean, it's just the one thing that you can talk about narratives. You can talk about all the stuff that's going on in the world. But on the other hand, liquidity runs on liquidity. And whenever you have a little bit of a rejection here, you have like two very beautiful dragonfly doji candles here back testing previous resistance into support, like things just go up, right? And at some point when things go up, they do need to kind of cool down here a little bit. And certainly looks like the Nikkei has been cooling off, but it's just basically retesting the 0.76 here for the most part, right? So it's if you look at the linear, it's even holding 0.76 here on the linear. If you're talking about the Korean market crashing, you can also kind of look at their stock market here too. I mean, they basically have gone through done nothing here for like the entire decade, and eventually they had to break out, they had a back test, and now you go, right? I mean, this is just kind of how liquidity runs. And even when you're talking about the Korean market crashing, it's really just kind of holding the 0.76 here pretty decently, right? So I don't really see that big of a concern. I think the second biggest market in the world is going to be the Hang Seng Index. Actually, I probably need to look at a different version of that. Is this the one? No. Sorry. Let me pull up the one that I want to look at. Maybe this is the one here. Anyway, if you're looking at the Hang Seng Index, I'm just going to pull off this here. There's something that I've been looking at for a long time, which is copper and gold ratio. And that kind of tells you in terms of what the risk on appetite or risk off appetite there is in this world. The reason why is because if gold just keeps on going up, usually gold goes up is more like a little bit of a early to mid bull cycle kind of here. When copper goes up is when you really have like a true risk up here with the Hang Seng, which is like the second biggest market there is, because a lot of the big Chinese stocks, they're listed in the Hang Seng now, right? And look no further than the Hang Seng when you're looking for liquidity. So if you're looking at this here, I basically just see a big giant wedge here. There's a little bit of a huge deviation here with an Adam and Eve double bottom, and eventually you're able to kind of reclaim the wedge here, if you will. And if you're looking at the Hang Seng market here overall, you can see that it's basically just let me see here. Yeah, it's basically just got rejected here at 0.76, and it's basically backtesting 0.618. Like this is the golden pocket you're talking about here. So there's a lot of reaccumulation probably that's happening here for the last 6 months, and during the entire time, the gold and the gold has been just going parabolic, right? Copper has been falling a little bit, but it's been underperforming gold here, and basically it hits this bottom of this trend line over here just when the Hang Seng Index was kind of consolidating here for a long time. So as far as I'm concerned, I think that liquidity is probably going to end up breaking out to the upside here. That would probably be my next step. If you actually follow this trend line all the way back here, there's like a trend line that every single time whenever the copper and gold ratio bottoms on this trend line, the Chinese market bottoms. Like, I can even do a little bit more like trend line here, touch more lines over there. So as far as I'm concerned, I think this might be like a bottoming of the liquidity cycle over here. Even though the Chinese market has made a big run, I think this is just a recovery from a big accumulation zone. And it's back to the 0.618 here perfectly, stuck in the golden pocket. It's getting ready potentially for copper to kind of take over. And copper represents industrial activity, economic activity. Gold is just kind of like a liquidity sink. So as far as I'm concerned, if copper actually ends up outperforming gold moving forward, I think that's really when the risk on appetite is really going to come. The last time when that happened was back in April 2020, all the way to October 2021. And that was when the bulk of the Bitcoin bull market happened, right? So that actually does bring on a little bit more hope here. Like the last time when that happened with copper and gold bottoming was from around April 2020 all the way to October, November 2021, right? That was the bulk of the bull cycle. So it does make me wonder whether or not we're getting ready for that. But anyway, that I've talked too long. I'm going to pass the mic back to you all. But Luca, I know you're interested in the Chinese market, so I just wanted to talk a little bit more about that. What are your thoughts on all this?
Yeah, I 100% agree with most of what you said. Some things I've been tracking that are very interesting are things like the CPI, the US inflation rate. So we can see here that even though the Fed has sort of transitioned away from their quantitative tightening policies, and even though they have eased their policies in terms of the interest rate and in terms of quantitative tightening, and so basically what they're selling by using their repo facility, even though they've done that, it looks like the CPI still isn't quite catching up. So we can see it here. In January, it came in at 2.4% year over year.
Matt, you want to share his screen real quick?
Yeah, sorry about that. There we go.
All right. So as I was saying, in January, it came in at 2.4%. In February, it came in at 2.4%. So that's a good sign, because it signals that even though the economy still remains resilient, as we've seen with, for example, the unemployment rate has remained quite stable over the last couple of years, pretty much at the same levels it has been for the past couple of months. Same goes for the personal income and spending. As we've seen on Friday, it came in at 0.4% personal income month over month, personal spending at 0.4% month over month. So that's pretty good. And the PCE still hasn't quite gone up considerably, as we are seeing here. If we look at it, it came in at 2.8%, so lower than the last reading from December. So that's a very good sign, because it signals that while the economy is still resilient, inflation isn't catching up. And that's a good sign for the markets. However, something that has caught my attention over the last couple of weeks, which I've been tracking, have been the yields, and specifically the 10-year Treasury yield. So, as we all know, the bond market tends to lead. So yields tend to lead the bond market and the Fed, because the Fed, whenever they want to make a change in their monetary policy, they first take actions in the bond market, the yield goes down, and after that, the interest rate also goes down of the Fed. However, the yield of the 10-year Treasury has remained pretty much at the same levels for the past couple of years. So it has been inside this range, inside 5%, and the lowest at 3.5. This has been the range. And in my view, this stability is bullish for the markets on the long run. What we want to see in the broader markets, in the bond market, in Fed's policies, is not necessarily more consumption or more, easier policies, let's say, more cash in the markets. There's a lot of cash in the markets. There's a lot of liquidity sitting in the markets, as we've seen with, the Chinese markets, as we've seen with the Fed injecting liquidity in the markets and in the economy, and as we're seeing in all of the indicators I have shown earlier, such as the unemployment rate or the personal income and personal spending. They have remained pretty much at the same levels over the last couple of years, which suggests a resilient economy. And because of this, I believe that we don't necessarily need easier policies, but we need stability in the markets. And stability will be what will lead to a risk on environment and what will lead to the next move to the upside. So I think that as long as we have a stable environment, and so far we have had some tensions with the Middle East, tensions rising with, you know, with a lot of these issues that have led to uncertainty. And uncertainty, of course, leads to, well, the price is going lower because people want assets that are safer and don't necessarily want to take on more risks. But now I think we're entering a new period where we're going to have more stability in the markets. And tensions will gradually come down, as we've seen with oil. Oil, for example, is starting to cool off, right? It has been in this parabolic move up. I think this is coming to an end. As we've seen here, this large spike suggests a very big pressure from the selling side. This candle also suggests that, so even though there have been a lot of tensions, I think that what we should be tracking instead of the news should be, first of all, data, should be the market structure. And if we're really focused on the geopolitical tensions in the Middle East, we should be tracking oil's price, because this is what leads any sort of news. The markets always lead the news. And as I was saying, I think that we'll be entering a new period where we're going to see more stability from the macroeconomic side, and most important, from the geopolitical side. So what do you guys think about us entering a new risk on environment and a new move to the upside? Do you think that we have bottomed, or that we could have more downside on the low time frames?
Yeah, I think, like I was saying before, I think risk on is still here, right? I think everything when it comes to gold and oil and everything, they appear to be topping, and a lot of people are worried about gold being inflationary, but so many indicators out there are showing that the risk on environment is still very strong and liquidity is still pouring in there. So I'm not too concerned about any kind of economic crisis or anything at all, because none of these charts are indicating that. If there was real fear, everything would be kind of declining together. All the assets.
Yeah, I think a lot of people are kind of drawing correlation, especially with the 4-year cycle thing. They think that this is just like 2022, but so far the market has been nothing like 2022. Everything has been kind of rotating around. Some things look pretty bullish, some things don't, and then they just kind of make their turns, and it looks like a pretty healthy rotationary market that leads it to something that doesn't necessarily look like a crash. Yeah, if you want to flip over to my screen, Matt, just want to kind of show you. This is a chart that I just posted on X here recently, looking at oil prices versus what the market does. And this is the IWM. This is probably the most economically sensitive because this is the US small cap stock index. Oil going up is not going to be that bearish, to be honest. Like, I think sometimes if you just kind of put it into context, oil prices peaked around 2022, and since then it's been going down in a straight line for about the last 4 or 5, like the last 3 or 4 years. So to have a little bit of a pump here to kind of offset this move, I think is completely understandable. The other thing too is this is still a lower high compared to the peak over there, despite the news being pretty drastic. You're talking about, Iran, which is a major oil producer, and it's still kind of getting rejected over here. It tells you something, right? And every single time, whenever you have a big pump in oil that happened over the last two economic cycles, actually a beginning of a bull market. The reason why that is, I mean, you actually don't want to see oil go down in a straight line. You actually want to see some stability in oil prices. The reason why is because you need oil for productivity. As long as it's not anywhere, insanely, unstable to just keep going up higher. I think it's okay to have a little bit of pump in oil, and that actually could be good for overall market to it's a sign that there's actually some demand there for oil, because I was worried about oil going down a straight line for a long time. I mean, granted, this could be because of geopolitical event and because of all that, but a trend is a trend. I think the trend has been stabilizing here for quite some time. If anything, you see a little bit of double bottom over here for oil. So this breakout over here is actually not that surprising when you look at from like a technical side. And even the breakout is still getting rejected here at this horizontal zone over here, right? So we're not really truly doing anything crazy here. The entire time when this is happening, the small cap's just basically backtesting a breakout area of a previous resistance here that got rejected here late 2021 and again here in late 2024. We broke out a few months ago. We were just basically backtesting that zone. Can it go a little bit lower? Sure. But this is not like a screaming, impending doom or anything like that. Talking about yields, you can chart these things just like what Luca is saying. With the 2-year yield, sure, you got a pretty scary, bullish engulfing candle here. Can yields just end up, going all the way up here again? Looking at the inflation data that Luca was saying that was showing you, it doesn't seem to be. Even when oil prices go up, we talk about, we're not even anywhere near like a higher high. It's been going straight down for the last few years. If you look at you try and find a trend line break, I'm not seeing a trend line break there. And you can draw these trend lines however you like. You can say, oh no, it broke out of the 2-year yield that's broke out of this trend line up here is going to go up a lot higher. Not necessarily. So I generally look at it more from like a trend perspective. The best way for me to look at it is through the Bollinger Band. And the Bollinger Band gives you a benefit where you have like a 20-month moving average here that kind of tells you the trend. Whenever you break underneath a previous support level and now it's turning to resistance, every single time we back test the resistance, I'm going to be a little bit more skeptical that it's going to break out. And right now, even over the 2-year yield, we haven't really had that higher high. It's just been a downtrend, right? And the 20-month moving average tells you that. We have just kept on forming these, these lower low over here. So to me, I think the 2-year yield is still going down. And if you're looking at, any potential reversal here, one way I usually look at it is like, okay, so is there any like bullish divergence here? No, not really. If anything, if I look at the 2-week chart here, yeah, you have some bullish divergence over here. But you also are starting to develop some bearish divergence here too, right? I mean, like it looks like it wants to pump, but RSI is actually showing some bearish divergence. So actually not sure whether or not the 2-year is just going to keep going up in a straight line. And the 10-year yield is also the same thing. It's just been hugging the 20-month moving average. It's just been a little bit trendless here. So I don't really buy that you're going to get like a huge yield spike. If anything, I do see a little bit, if you just like squint, you can see a trend line over here that it has a hard time really breaking out. It's just forming a wedge over here. It's forming some stability. Eventually, it's going to go one side or the other. But like so far over the next few months, I actually don't really see the 10-year yield doing too much. Looks like it's just kind of stabilizing. So I don't know what the narratives about like the Fed changing chairs and oil spike is gonna cause yield to like go up higher because of inflation fears. Just look at the objective data and the trend. It's not really showing you that degree of fear that some people are talking about based on narratives. So that's what I wanted to share on that topic, Luca. I'm going to pass it right back to you.
That was really interesting. And I would also like to add something to what you've said about the IWM and small caps. If you could flip over to me. Yeah, so here we have the IWM to SPX ratio. This basically tells us the performance that small caps have had compared to the traditional equities in the S&P 500. And as we see here, ever since the Fed has stepped away from their quantitative easing policies back in 2021, small caps have been underperforming the more traditional and bigger equities in the S&P 500. And this is pretty logical because big equities and companies with big market caps can attract more liquidity. So of course, in the competitive space of small caps, if you don't have access to cheap financing because interest rates are high, you're going to have a lot of underperformance compared to the companies that can attract financing and can, expand their business operations and so forth. However, this has changed since April of 2025 because from 2021 to 2025, this ratio has been forming only lower lows and lower highs. And now this trend has shifted, and it looks like we're forming higher lows and higher highs. So what does this tell us? What does this tell us? Well, I think it tells us that in the next couple of months and years, not necessarily weeks, not necessarily in the short term, but in the next couple of months and years, small caps are going to play a major catch up. The reason lies, in my view, in the fact that we're transitioning towards a new macroeconomic environment to the one we have been in over the last couple of months and years. In the quantitative tightening environment where liquidity has been reduced, now we're entering a quantitative easing environment where liquidity will be injected in the economy to stimulate consumption. I think that we're entering a very interesting period because a lot of people are currently scared and anxious, similar to how they have been back in 2022. And nobody really wants to buy now. So if you look at Bitcoin and the broader crypto market, if we look at what's happening currently, we're seeing everyone calling for a 4-year cycle, right? And they think, okay, we have topped out, the 4-year cycle is playing out. We are in a bear market and we're going to bottom out somewhere in Q4 of this year, somewhere around $30,000 to $40,000. So everybody's currently in cash waiting for that. That's my view. And what if that doesn't happen? What if we're currently in a similar situation to what we have been in back in from December of 2024 to April of 2025, when we had Bitcoin going down here? So what if we're currently repeating something similar to this, but on a larger scale? Everybody's currently saying that we are somewhere here in this cycle and that we're far from bottoming out, and that this is sort of a complacency phase that leads to a continuation to the downside. And this would be the range where we could bottom out, somewhere here. So this is the main consensus I currently see on the timeline. And I don't know which scenario is going to play out, but generally speaking, the main consensus doesn't happen. If everybody's waiting for something, that something is not going to happen. So I think, and if we compare these periods, first of all, if we compare February of 2022 to now, well, I think that the sentiment is completely different. Back here, everybody thought, okay, this was a healthy correction compared to this one, and now we're gonna have all-time highs. And everybody was calling for 100K at the time. Everybody. Only a few people actually called for a continuation to the downside. And now everybody's saying that we're going lower, because of the war going on and all of these things. But we have multiple correlations showing us that liquidity is starting to come out of the traditional assets and traditional equities and into risk assets, such as small caps, as we've seen the IWM outperforming the S&P 500, right? If we look at how the IWM has performed over the last couple of weeks, it has rejected this high time frame resistance range. But if we compare it to how it would have performed if we were in this downtrend, we would have seen the IWM going down by, 15% or so, while the S&P 500 has only went down about 5%. And that wasn't the case. because I think that small caps are likely to start outperforming the more traditional equities because we're entering a new macroeconomic environment. So, what do you guys think on this? What's your stance on small caps currently?
Yeah, I actually shared a chart on X today, and here it is. Like, it's the IWM SPY, and this blue line is my 21 EMA for the 2-week chart. And I think this actually shows the trend quite well, right? We do see that in 2020, it kind of bottomed out. Then the 21 EMA was started to be upward sloping. So there was a brief outperformance from 2020 until 2021, until the market top. And then the 21 EMA became downward sloping. So I think if we're going to just follow this as trend, we are now seeing prices A on top of that 21 EMA. And also B, it's starting to be upward sloping again. And since basically back in January, we've been flipping these 2-week candles to a support. And just last week, it went back and touched that 21 EMA again as a support. So I think what we're seeing is kind of like the beginning of maybe a new liquidity cycle that could be a big outperformance for risk on assets, including crypto as well. And yeah, like you were saying with Bitcoin too, I do have like a linear GAN that I've been focusing on, and the 71,000 zone, I think it's a very important area because if you just look back in March and April and May and June of 2024, it was a major previous resistance zone. And now it is actually reclaiming it last week as a support. So this also goes in on the theory that this could be the beginning stages of some more liquidity pouring into risk on assets, including Bitcoin and Ethereum and everything else. So I think we're closer to the beginning of this than the end. I think this can last a long time. And I think all we need to use is that 21 EMA, especially on the 2-week chart. It tells us really the trend. And right now, the trend is just beginning for the outperformance of small caps, which is also the beginning of some powerful liquidity entering the system.
Beautiful. Yeah, if you want to flip over to my screen here, I'm going to touch on a few things that Luca was talking about and also reiterate what I was talking about earlier. This is a chart. I published these things like a few weeks ago on X. And this is just to kind of show you when these things line up. It could be incredibly powerful. This is the Hang Seng Index on top here. We're talking about the second biggest international market here. And again, copper and gold ratio down the bottom here. This actually turned out to be like one of the more important indicators. So everything just lines up with copper and gold, which is kind of crazy, right? Each time it bottoms over here, I was telling you, like, basically it bottoms the Hang Seng Index here. And right now we're at the juncture where we're stuck in a tight range here. Maybe we're looking for a breakout either to the upside or the downside, when copper and gold is just like basically hitting the bottom of the trend line here again. So I favor this bouncing off of this trend line, and I favor the Hang Seng Index to kind of break up to the upside. If you're talking about small versus large, and what I have here, again, this is also from a couple of weeks ago when I published it on X. The top here is the Russell 2000, which is the small caps over the large cap, the S&P 500. And that's also just to show you pretty much every single time when copper and gold ratio hits the bottom trend line over here, that really just marks the bottom of the Russell over the S&P 500 almost perfectly, right? You can see that. And this is a pretty big bull run over here from like 2012, 2014. I don't know if people remember, that period of time. Most people probably don't. Most people probably only remember what happened over the last like 2 or 3 months. But, whenever this happens, you have a big run up. This also happened. You have a bear market for the most part from like 2015, 2016. And whenever the copper and gold ratio, that's the bottom of the Russell 2000 over S&P 500. So small cap outperformed there for about a year. Small caps outperformed there for about 2 years. And everybody remembers, probably most recent market participant, remember how bullish it was from like April 2020 all the way to maybe around like April of 2021 or like maybe February of 2021, I should say. And that was a big area where where small caps was outperforming the large caps significantly here for many months in a row.
But almost everybody capitulated though during the COVID period,
because it's scary because the whole economic
they were panicking.
They've never seen anything like this before. this is so scary. The whole economic, activity is completely shut down. Everything was out of whack. Nobody can chart. When reality is the copper and gold ratio just hit the bottom of this trend line. And next thing you know, you just have a huge bounce because of how liquidity works, right? And then with this huge bounce over here, if you look at a copper and gold ratio, I almost argue that we've had a bear market for about the last 4 years. And you can feel that if you're in altcoins. if you're in altcoins, you might see, yeah, there was a little bit of a bull market here for about 6 months, around late 2023 into early 2024. But if you're in altcoins, you would have felt it totally that, hey, this has been a bear market for about 4 years. If you're in Ethereum, you would have felt that. If you're in Bitcoin, you would have felt that, hey, yeah, maybe the bull market was over. But the reality is, I don't think that risk on market has even happened yet, because the entire time copper versus gold ratio has just been going down. Liquidity has been going into gold. It's just like a big liquidity trap, right? You're talking about gold market cap right now is for like 40 trillion or something like that. You're talking about the entire US market cap, maybe around like 60 something trillion. I think last time it was my favorite number, $69 trillion in terms of market cap. There's a lot of liquidity that's being trapped in gold right now. And you just have to have a little bit of rotation out, and next thing you know, certain things can outperform. And just looking at this, it looks like we might be at a juncture where the small caps are getting ready, to kind of outperform here a little bit. So that just kind of, makes me wonder here a little bit. If you're also looking at not just small cap versus large cap, you just look at like, Cathie Wood's ARK fund, where it's being made fun of because of this big underperformance that it had against S&P 500 for like 2 years straight. This is the ARK over SPX, basically ARK fund over the S&P 500 ratio. And even that has been forming higher highs and higher lows ever since, around 2024. And right now, the 20-month moving average of this ratio is serving as support. Actually, it looks like we had a pretty decent breakout of Cathie Wood's fund over S&P 500 for like a whole year and a half. And right now, it's just basically cooling down of that outperformance. And it's looking like ARK wants to continue to outperform S&P 500. And that's more of a risk-on environment than anything, right? The last thing to talk about was that we just had a flash crash in Bitcoin. There's no other way to put it around it. And some people say, oh no, it didn't feel like a flash crash. It felt like it happened for like a few months. And I would say, yeah, but if you compare it to the flash crash that we had last year with the Russell 2000, and certainly right now we're not having a flash crash in Russell 2000. Or Russell 2000, this chart was like from a month ago. Russell 2000 got rejected over here and basically come back down to backtest the previous all-time high over here. That's what it's doing, right? And while that's happening, Bitcoin basically has just plummeted all the way down to the 0.136 fib over here. Kind of like back in 2025, from like February all the way into April of 2025, when IWM just crashed right into the 0.136 area over here. And the timing of this, if you look at the fib levels, if you look at the timing of that crash, and you look at the timing of the pump before that crash, all the timing actually lines up pretty well. I'm not saying that, this is what's going to happen. I'm not saying that Bitcoin is going to make a V-shaped recovery. I don't know the answer to that. But all I'm saying is that this is a flash crash. And when you have a flash crash, a lot of people are off sides. And when you have a flash crash, and when it's just a flash crash on an isolated asset rather than an overall market, it makes you wonder whether or not there is enough liquidity to kind of rotate back into Bitcoin whenever other things are done being euphoric. That's kind of what I'm looking at. And this is a market where people just keep chasing what's, euphoric, and they're not really necessarily looking at the overall trend for different things. If you're chasing gold where it is at right now, you're probably doing it wrong, right? I mean, sure, can it go higher? Yeah, it can. I'm not saying that it won't. But if you're chasing gold where it is at right now, I think you might be kind of doing it wrong here, because it's just been going parabolic here for a very long time. If you do a fib level from the bottom over here to the top, like it's basically hit a pretty important fib level, 2.414. If you do a fib level, let me see here. Yeah, I mean, I just think that it's basically hitting a pretty major top here, right? And it's basically trying to consolidate here between the 2.44 and 2.272. But whenever you have a lot of green candles in a row, how many monthly green candles do you have in a row? 1, 2, 3, 4, 5, 6, 7, 8. That gets me worried. And whenever things just kind of go parabolic like that, it's just I don't care about the narrative. I don't care if there's a war. I don't care if gold is supposed to be a good asset. When you have war going on, I just don't really care about all that because I look at the chart, it looks risky to me. If you look at the yearly chart, and I'm going to put up the Bollinger Band here, it's way outside the yearly Bollinger Band on the upper Bollinger Band right over here. When was the last time when gold was way outside the upper Bollinger Band? It was back over here in January of 1980, right? When it didn't even bother touching a Bollinger Band. Now, I don't know when it's going to touch the Bollinger Band here for the year and it just keeps going higher. That could be, right? But if it does, then you're talking about gold correcting, possibly going down to right now is 3,800 is where upper Bollinger Band is at right now. It could, and then it could just keep going up higher, right? I don't know. But if it doesn't, and if it corrects all the way down to 3,800, I would argue that a lot of momentum has been lost at that point in the lower time frame, and it could probably be the top right there too, right? But if it doesn't, then you're talking about a yearly candle that's way outside the upper Bollinger Band over here. And the last time when that happened was here, and gold did nothing for 2 decades. Like I don't know if that's the best asset to be at right now, even though the gold bulls have absolutely been correct over the last 4 years. They've absolutely been correct over the last 4 years. I have to give them that, but I just don't know whether or not the risk reward ratio is there for gold right now. And I do think that because you have a lot of liquidity being trapped here, $40 trillion of market cap over here. Whenever it decides to rotate, whenever the copper and gold ratio decides that it wants to bottom, whenever Chinese decide that they want to keep printing liquidity because they're still fighting deflationary forces over there. I mean, like CPI, all that stuff, oil, all that stuff. Yeah, but you still have deflationary forces over in China. And whenever it decides that it wants to rotate from large cap to small caps, I think this is going to be pretty risk on. I don't know how long it's going to happen for. I don't know when this is going to happen, when it's going to start, but it looks like something is building over here, guys. Anyway, I talked for way too long. I'm going to pass it back to you, Luca.
Yeah, the main thing with gold right now is the fact that it has lost its main purpose, which is to be a safe haven asset. It's not performing like a safe haven asset anymore. So, if we look at gold right now, and we see it in terms of, tensions, like we've seen over the last couple of weeks with the geopolitical tensions between Iran and the US and Israel going on in the Middle East, gold should have been going up, right? But it didn't. Instead, it went down. And it has since been consolidating inside this range. So,
hey, Matt, can you flip it back to Luca? I don't know why it's showing my screen here. Yeah, there you go.
Yeah. Okay. So as I was saying, it has been consolidating inside this range. So it has lost its main purpose, in my view. And yeah, that is very interesting. And then I don't know how it will be performing moving forward. I don't know if we'll enter risk on environment and liquidity will start flowing out of gold and into Bitcoin, or if both are just gonna keep on rising because gold is not seen as a safe haven anymore, but as a risk asset. So that's an interesting topic to discuss. I don't think that's the case, but anyway, it's not a safe haven anymore. So if gold or silver are not a safe haven anymore, I don't think that they should be a large part of your portfolio, because that's why, in my view, you should own gold or silver for diversification purposes, or to reduce your overall beta in your portfolio, to be more diversified and to be allocated to more industries, and to mitigate some of your portfolio risk. So in case a part of your portfolio goes down, such as risk assets, small caps or crypto or other equities, you have the other part of your portfolio which is holding it up. So you can scale out of your more defensive positions and scale into your risk positions if the market structure is also a strong correlation, if it's a good buying opportunity. But now, that's not the case anymore. So that's an interesting topic to discuss. Now, if we look at Bitcoin, because Bitcoin is really interesting right now because it has broken above the 2-day bull market support band. So if we look at it here, the 2-day bull market support band has been a pretty strong reversal point over the last couple of months. Initially it has been a strong resistance. It acted as a strong reversal point many times. Then it acted as a support, and then once again as a resistance after the price has broken below it back in late January. And since then, it has been a resistance here, and now the price has finally broken above it, which is a really good sign, a clear sign of strength. So now going forward, what I would like to see before taking a more bullish stance on the low time frames, because the midterm and the high time frames, in my view, from here are bullish. I think that the downside risk is very limited compared to the upside potential. If we look at it in terms of weeks or months. So if you want to mitigate the short-term downside risk, you can, but that's the only thing I think we should be worrying about. However, if we have a long-term picture, we shouldn't be worrying about that, and we should be focusing, what's going to happen in the next couple of weeks and months, and is this a good buying opportunity on the long run? And I think that the answer is yes. However, before taking a more decisive stance on the low time frames, I would like to see the price breaking above the $77,000 level, as this aligns with an important lost high time frame support range, which has been the early April of 2025 bottoming formation. So, this level could act as a rejection point once it gets tested. However, because the price has broken above the 2-day bull market support band, I think it will act as a support point. So maybe we'll have an initial rejection here and then a test of the support band. So something similar to this, the support band catching up from here, and then a continuation to the upside. That's what I see in the short term, or maybe the price breaks once again below the support band and we have further consolidation inside this high time frame support range. So that's why I'm saying that before taking a more decisive stance on the low time frames, it's best to wait and see whether the price can actually manage to break above this lost high time frame support range. So what do you guys think on Bitcoin right now and its market structure?
Yeah, I actually was telling my Patreon people earlier today the same thing. Like, even though we got a good reaction off of support, we're not really, we don't have the momentum to go higher. And I think a good rule of thumb is just watching the weekly conversion line, because historically we saw, like back in 2024, this blue line here, as long as price stays the majority below it, there is not going to be an ability to break out higher. And the same thing back in 2025 in January, it was below this blue line always until it broke out. Then the uptrend resumed. So if we're going to resume a powerful uptrend, that is kind of right around your 77,000 mark, 78,000, which is the blue line. It's at 76, 781. So we really need to start to close weekly candles above it for many assets, not just Bitcoin, right? Ethereum as well, right? We can see here the blue line, the conversion line is at 2512. To have any kind of a powerful impulse move higher, we really need to break that as a resistance. And we saw that last time, right? Back in May, it was below that blue conversion line, or not back in May, like back in January, the downtrend was very, very strong of 2025 until this bullish engulfing candle broke above it, then back tested the conversion line and went higher. So we still need to do that to get a very confirmed trend reversal. So I know a lot of people are excited about all this green, but we don't really have that trend reversal just yet. We need to break above on many numerous assets, like Bitcoin, Ethereum, XRP, and Solana. So many other assets need to break above that weekly conversion line to get the momentum to go back to some new highs. So we're not there yet. The bottoming process is kind of like confirming itself, though. But in order to have a bigger breakout, I think we need to be a little bit more patient. And some people are getting ahead of themselves just because they see green, they get excited. But we're going to come into some powerful resistance here for Ethereum. 2,500. It's going to be pretty powerful for Bitcoin. It's going to be pretty powerful around 76, 77. 100,000 all the way up to even 80,000 is going to be some pretty big resistance as well, because that was the major support zone that was lost back in January of this year. So we have some more work to do, but yeah, the structure is improving, but we need more of a bullish trend reversal first before we're going to get to all-time highs.
Very nice. Yeah, if you want to flip over my screen, I can just show you what I think about Bitcoin here. The truth is, ever since institutionals have adopted Bitcoin, I almost kind of convinced myself I don't even really need to look at anything else anymore. I don't need to look at how Bitcoin behaves and in like different exchanges. Maybe I just need to look at CME futures. Like that's kind of where the majority of the liquidity and price action is at anyway. This is the CME futures chart for Bitcoin, the monthly chart here. And what I've got here are two things to pay attention to. One thing here is the fib levels. We've talked about ever since you have CME futures, which is all the way down at the bottom here, December 2018, to the top right here, October 2025, you do a fib sequence here. It basically retraces all the way down to 0.5, and it held perfectly fine, right? That's one area where, I mean, could it go down to like 0.382? Sure. I mean, there's always a possibility for it to do that. Can it go a little bit lower? Sure. But every single time when you're at an important fib level, especially with 0.5, I'm gonna be like more skeptical about it going down further. The other reason as to why I'm also worried about it not going down further, and I know it's kind of weird to say worry about it not going down further. That's what I think that's how you're supposed to think anyway. But the reason why I'm worried about it's not going down further is because you have a big liquidity zone over here. Like, I don't even need to have this volume shelf over here. All you need to see is just previous all-time high here, 2021 April and November. There's a lot of price history over here. That area has already been kind of tested over here for almost 8 months throughout 2024. So that's a big liquidity zone over here. Whenever you have a crash right into a big liquidity zone, and you can see why it crashed all the way down there. If you're not able to hold the area up here, there's really not much liquidity over here. So it went right into the liquidity zone down here below, which is huge. You're talking about a 4 or 5 year liquidity zone. It's been finding support there since. And the longer it hangs around there, the bigger the volume show is going to be, the more price history you're going to have over there. So for people that just assume that it has to crash down to like 50,000 right away is probably a mistake. You have to prove that you're not able to hold this liquidity zone before you can call lower. That's kind of the way I look at it. The other thing too is, could it hit resistance up above? Yeah, I mean, it's a downtrend and to prove it otherwise. The only thing I have to mention was what I was mentioning earlier. This is a flash crash. So if it's a flash crash right into a huge liquidity zone, sometimes the bounce can happen faster than you expect. So even though we do see a lot of technical resistance that Matt was talking about, 76,000, 80,000, so on and so forth, the liquidity zone up above probably is maybe around like 83, 84,000 based on CME. So it could surprise people to the upside and just hit a strong resistance zone up there and then chop around there for a while. You can also potentially see resistance around 80,000 because that's a 0.618. That what is also logically speaking, psychologically speaking, 80,000 could also be an important area, right? You also see that it was previous support over there, and they can turn resistance whenever it gets up there. So that's kind of what I'm seeing here. But the reality is, I think that right now risk reward ratio, if it gets closer down to this liquidity zone over here around 65,000, it's pretty good. That's all I have to say. I'm not going to say, oh, Bitcoin has bottom. I'm not going to say, oh, Bitcoin's going to shoot up to this guy from here. All I'm seeing, just objectively looking at this, we are probably close to a very important local bottom, if not the bottom for this cycle. Just looking at the liquidity zone. And if it bounces up, objectively speaking, it could literally just go all the way up to like 83, 84,000 before any major rejection can happen, right? With that said, a lot of people are going to look at different, micro resistance zone. A lot of people are going to end up, getting chopped around here during this chop, and I just don't know what's going to happen short term. But this is like a very high time frame view in terms of what I think is probably going to end up happening. What happens when it gets up to this volume shelf up here, I do not know. I think, I can speculate and all that, but for y'all are more objective than I am probably, so I'm going to remain objective here. I don't know what's going to happen when it gets up to this liquidity zone. It could get rejected. It could chop here for a long time. You get rejected there and make another lick down lower to 50,000. Sure, all those are possibilities, but objectively speaking, is holding the area where it is supposed to hold right now. So I remain more bullish when it gets closer to your support zone right there. Luca, pass it right back to you, man.
Yeah, I mean that's pretty much all I wanted to say as well. I think that we need more confirmation before taking more decisive stance. For now, on the low time frames, we have been in a downtrend, and until there are some clear, signs of strength, like the price reclaiming key lost high time frame support ranges, I think that the best approach is to, keep a more objective approach. However, if we want to look at the midterm or high time frames, or see whether we could go down more, or see whether the downside risk is, more than the upside potential, we can look at the USDT dominance. So here we have the chart, and we can see that over the last couple of weeks, the USDT dominance has been in a distribution phase in this high time frame resistance range, which aligns with the bear market highs. So here, this is where the bottom of the bear market in the broader crypto market has formed back in 2022. And every time this range has been tested, back in 2023, when Bitcoin was at $25,000 to $30,000 inside that consolidation phase, it led to continuation to the downside. So in my view, this is the limit for the USDT dominance. I don't think that the USDT dominance is likely to go up from here. So because of this high time frame resistance range, which has been a very strong reversal point in the past, it has marked macro bottoms and important bottoms in the past for the broader crypto market. I think that the downside risk from here is limited compared to the upside potential. And that's why I'm not worried about the short-term volatility, even though we could have a rejection at the lost key high time frame support range at $77,000. It will lead to just another bearish retest in the USDT dominance of this high time frame resistance range. So something similar to this, a bounce on the low time frames, which would align with a rejection in Bitcoin's price at that lost high time frame support range before a continuation to the downside. So in a more bearish setting on the low time frames, that's how I would see the USDT dominance. But on the high time frames, I think that, this distribution phase will lead to a more durable uptrend in the next couple of weeks and months for the broader crypto market. So Matt, do you have any thoughts on the USDT dominance?
I do have thoughts on the others kind of dominance, not really the BTC, or not really the USDT dominance. Let's see. Yeah, let's just take a look at. Sorry.
You've got this. I trust you. You've got this.
No, my mouse wasn't going to.
Your mouse is broken too?
I wanted. Again, it breaks all the time. No, I kind of wanted to just show the 2-month chart here. Sorry, that was a 2-minute chart, I think. I don't know what's going on. The 2-week chart, that's what I want to show. So the 2-week chart here for the others in BTC, this is really showing something that is just beginning to. So we saw something similar to what we're seeing now, with the conversion line crossing above the baseline, with basically the same thing happened in 2023 on the others, and that just ran into the wall of the Ichimoku cloud, and then it basically sold off from there. But this really also illustrates the liquidity cycle too, that we've been bearish for altcoins compared to Bitcoin for a while, technically speaking, since it broke below the 2-week cloud. Back in 2022. It's been in a bear market for a while, but now we're regaining some momentum. We're holding both the conversion line and baseline as support. And this is just showing that the others dominance has potential to continue to outperform Bitcoin. And it has a ways to go, right, until it gets to the weekly cloud above. It can go up a little bit higher. How much of a percentage would that be? That would be right up here about 23%, right, towards that cloud, or maybe even 30%. So we could see a big outperformance, but we're not really going to have like a true breakout, in my opinion, until I think that 52-week average gets broken, because that has really been our trend indicator. This green line right here, all the way down. So it was an uptrend, then it broke below, and then ever since 2022, it's been very, very bearish, and it's never really closed any 2-week candle above that. So it has a ways to go to get there, but are we really going to flip that to a support? We'll find out. But I think others' dominance is going to have the ability to outperform Bitcoin still. I think as long as it continues to hold both the conversion and baseline, we'll see that dominance continue, which I believe aligns with that USDT kind of topping phase as well. Maybe some more USDT is going to be going into altcoins compared to just Bitcoin itself.
Well, on the flip side of the coin, you also have like a Bitcoin dominance chart to show as well.
Yeah,
I knew you do.
Of course.
I just knew it.
Whoa, what's going on with all these writing here? I think I was doing some explanations here. Uh-oh. Okay, go ahead.
You can do it.
Yeah, so Bitcoin dominance is right now backtesting that 2-week cloud as well, right? So it's also on the underneath this 52-week moving average as well. So is it going to continue this underperformance? Possibly, right? We do have on the linear scale too, it's underneath that important fib right there, which is right around the 60%. And I think as long as 60% stays resistance, there is a good potential of continuing the trend down. And this is the first time it's been in the 2-week cloud for a long time. And it can probably stay inside that 2-week cloud for a while and even gravitate towards the bottom end of that cloud, which is closer to that 56%. And even that 200-week moving average, or 202-week moving average, is around 55%. So yeah, Bitcoin dominance, I think it's likely headed sideways or down before any chance of reversing that trend.
Very nice. Yeah, if you want to flip over on my screen, I'll just have a couple of charts here to show, and then we'll maybe move on after that. So yeah, instead of just looking at the USDT dominance, I summated both the USDT dominance and USDC dominance as well, because those are like really the two major stable coins there is in the market. And USDC is becoming a little bit more increasing in market share. So I added the both together and look at their dominance together. They got rejected here at 0.618, like perfectly. I think that's probably, if you get rejected at 0.618, I think that's probably like a pretty decent top right there. I would expect maybe even some consolidation and maybe some downtrend, maybe even come all the way back down to like the 0.382 or something like that. That's what I would probably expect to happen next. If you're talking about the Bitcoin dominance, this chart I posted 3 days ago, and I know I just keep on talking about the copper and gold ratio because I think it's important when it comes to liquidity flow, especially when it comes to how things are behaving, versus gold, which has been a big 40 trillion liquidity sink right there. If you look at copper and gold ratio, pretty much every single time, whenever you have the bottoming of this, that was getting close to, Bitcoin dominance dropping. Same thing over here, bottom of the copper and gold ratio. That was getting close to where Bitcoin dominance showing a lot of weakness. I mean, granted, it did end up making another like double top over there before plummeting, but that was getting to an area where it was getting a little bit more, risk on there. Whenever that happens with the copper and gold ratio, and you can say the same thing about the top here too. Whenever you have the top of the copper and gold ratio, that was kind of like the top of the bottom of the Bitcoin dominance, I should say, and altcoins did extremely well over there. That was the peak. The same thing around here. Altcoins did extremely well here towards the end of 2021. That was kind of like the peak of the copper and gold ratio. Right now, I would argue we're probably hit the bottom of the copper and gold ratio over here, and Bitcoin dominance has been showing some pretty significant weakness over there. So as far as I can tell, if you look at, in addition to the 2-week chart, and my favorite tool is still the Bollinger Band. Whenever you have an uptrend here that's been going on for a long time, you're talking about uptrending going on since like maybe September 2022, and it peaked over in June 2025. So you're talking about really like a big 3 years of Bitcoin just basically outperforming the entire cryptocurrency market. And you have a big drop over here. you drop underneath the 20-month moving average, and right now the 20-month moving average is not upsloping anymore; it's flattening, and right now it's underneath of that. So that tells me there's a lot of weakness going on, when it comes to Bitcoin in relations to the rest of the market. And you already kind of knew that too. The reason why you knew that is because if you just kind of lined up, and I hope I can do this properly without taking too much of your time, but if you just line up two things here, I'm going to do a weekly chart here of Bitcoin. And actually, I should probably do another one. If you just line up the weekly chart here of Bitcoin, and if you line up the Ethereum chart over here, you can actually see something, pretty interesting thing that had happened. And what has happened that was interesting is that Bitcoin is actually underperforming it during the most recent crash. Because if you remember what happened during the Bitcoin bottom over here around November 2022, Ethereum actually had like some slight outperformance there, right? Ethereum crashed a lot harder, sure, but then whenever that bottom happened over there, that was the absolute bottom for Ethereum. The absolute bottom of Ethereum was in June 2022, when Bitcoin has another lick down lower in November 2022, and Ethereum just basically formed the higher low over there. What's happening right now? Well, Ethereum crashed hard over here in April in 2025, right? Bitcoin, yeah, it crashed, but not too bad. And right now, Bitcoin just formed a lower high or lower low when Ethereum just formed a higher low. There is maybe a little bit of rotational forces over there that's being hidden behind the scene. And it just reminds me of what happened last time when Bitcoin bottomed. That's all. I'm not saying that Bitcoin bottom. I'm not saying any of that. Scratch all that. But this reminds me of what happened last time when it did. So, all right, Luca, back to you.
Well, now I want us to move on to Ethereum as a final point, as you guys have talked about Ethereum. Now it's my turn. So these are the levers I'm currently tracking. Ethereum, from a market structure perspective, in my view, looks better than Bitcoin because it has managed to reclaim an important lost high time frame support range. So if you look here, back in February of last year, this range has been a strong support point. Then it acted as a resistance back here in March when it was lost. And back in June, when we had this correction, it acted as a support point once again. However, since the price has broken below it in February, early February, it has been a resistance. And it acted as a resistance about 4 times before the price finally broke above it. And the price also has managed to reclaim the 2-day bull market support band, which, if we look here, throughout these past months, it has been a very strong reversal point. And this is a clear sign of strength. Now, the next key POI will be the $2,600 level, which aligns with another lost high time frame support range. If we look here, initially it has been a resistance range, and after that it has been a support point back in December of last year until it was lost. So this could act as a rejection point once it gets tested. However, because the price has broken above the 2-day bull market support band and has reclaimed this important high time frame support range marked in purple, I think that the downside risk is limited even on the short term, even if we see a rejection. And so this could be from here a good buying point. I think that as long as the price keeps staying above the 2-day bull market support band and above this high time frame support range at $2,100, the most likely outcome from here remains further upside. So that was my part. What do you guys think, if you have any other thoughts on Ethereum or the broader crypto market going on from here?
Yeah, go ahead, Ken.
No, I don't have much. I want you to talk, man. What do you? I think you shared, a lot of thoughts about the overall crypto market. Do you have any crypto market cap charts or anything you want to show?
I think the biggest thing that I've been watching is Total 3 without the stable coins.
Yeah.
That's about it. And yeah, I mean, I already shared my Ethereum charts and Bitcoin charts. So ultimately, what I really want to focus on the most is.
Yeah, you might want to flip over to your screen.
Yeah, just the Total 3 ES without the stablecoins. I think what people need to pay attention to is what happened last week. It actually flipped that 200-week moving average back to a support, and not many people are really talking about that. So my purple line is that 200-week average, and we closed above it yesterday, and now we're seeing continuation higher. So for the past like 5 weeks in a row, that 200-week moving average has been a resistance. So I think if we're looking at a continuation higher, that's going to hold. And if that's going to hold, that could actually still be more of an upward sloping 200-week moving average than anything else. So if it remains upward sloping, it can keep pushing price higher towards that 513 billion. So I think if we just want to take out the stable coins, this is a great look, because let's just focus specifically on that purple line and no other indicator to make it easier to read. Because what we're really seeing is this is truly the previous resistance point flipping to a support for many, many years. And that happened in December of 2023. So yeah, the bear market was here. It was starting to recover, but it didn't really fully recover until it flipped to support. And essentially it's been riding it as support ever since. So if we're going to look at anything, because a lot of people don't like to look at stable coins because that's like the majority of total, the majority of others, the majority of everything, right? All those charts have like billions of dollars in stable coins. So if we're going to look at the true capital appreciation of crypto and altcoins alone, this chart perfectly illustrates that. So as long as this 441 billion holds, I think our trend is good, right? We can use this 200-week as our trend. And right now the trend is our friend. Reclaiming that means the trend is still our friend and price can go higher. Those are my final thoughts, really.
Very nice. Very, very nice. Let's see. I mean, my final thoughts are that, yeah, if you want to flip over to to my screen here, I was going to spend a lot more time, maybe make a separate video, because I like to yap for hours, as you can tell. Usually when I get passionate about things, I just go circular and make you listen to me for like an hour. You don't have to, like, none of these things. Anyway, what I'm looking at here, this is a chart I was sharing yesterday. I do think that if you're looking at a very, very, very high time frame, if you have, like mindset of like decades, I do think that it was time for gold to shine. And I think a lot of us are just not, in tune for that until it got too late. And that gold had really outperformed overall, a lot of assets really over the last 4 years. Every single thing has been in the bear market against gold ever since late 2021, and that's a fact, right? Because what you're looking at here is the gold, is the Nasdaq over gold ratio, and you can see that it's been forming ABC correction when you're just flipping the Nasdaq over gold after it hit the 0.5 from the dot-com bubble FIP level. During the entire time, looks like copper and gold ratio is also top over there too. And looks like it might be the bottom of the copper and gold ratio. So I think it's been a bear market against gold. I think there's a lot of liquidity. I keep talking about gold because I think it's important. Why even talk about Nasdaq, right? We're talking about the crypto market cap over here. Well, the whole reason why I say that is if you do not just Nasdaq over gold, but you also do the total cryptocurrency market cap over gold, you're basically seeing very similar elite waves structures here. Right, really, ever since around mid 2010s, you can see that the Nasdaq is basically just kind of forming. It basically has outperformed gold. Gold done nothing for 2 decades, right? I remember me saying that. It's basically doing wave number 1, 2, 3, 4, 5 up here. And whenever you have 5 waves completed, ABC correction, which is what I think happened with Nasdaq over gold over the last 4 years when gold was finally at a position to outshine. The same thing was basically happening with the total cryptocurrency market cap. And you can basically see a very, very similar structure here. And I do think that it's probably done like a little bit of a wave flat correction over here for about the last 4 years. And then if you also look at the others.de, which is the others dominance chart, you can clearly see that the cryptocurrency, the rest of cryptocurrency beyond the top 10 had really been through a major bear market for like the last 4 years. That's why people are not making any money from altcoins. They're losing money for altcoins for the last 4 years, with the exception of maybe like a little bit of bull run over there. The entire time we've been in a bear market, guys, and the entire time it's just been an ABC correction, which fits together with the dot-com. Well, ever since the dot-com bubble here, when it hits the 0.5 retracement again, it's been forming ABC correction. We've been in a bear market all along. Maybe we're bottom. I don't know. But I just certainly still feel that this is probably, if you look at the risk reward ratio, I think the reward is potentially outweighing the risk here based on just decades of charts here. So, all right, that's all I got.
All right. So I think that pretty much wraps it up for today. We covered a lot of great topics today, guys. So it was an awesome talk with you guys. And thank you guys for coming.
Yeah.
Yeah, absolutely. I know initially we said maybe try to do this every 2 or 3 weeks. It's just been like a crazy schedule, but I think we should keep on doing these collaborations because it's good to hear these thoughts to instead of just being stuck at our own mindset. So yeah, happy to do this again soonish.
All right. See you soon, guys. Have a nice evening.
Bye.